There we go. Yeah. Any websites we talk about, I'm gonna put them in our Telegram. So like this one right here is FX Glory. This is one of the preferred brokers we like to use. I mean, there are like 3 or 4 different ones, and I'll make sure to make sure you have all of them. But we like FX Glory because they don't take all day with drawing the bread.
Yeah.
They give some of the best leverage, and I mean, leverage cuts both ways. It really does. My heck, oh yeah, gotta get into the nitty gritty. I gotta open up some stuff. Oh yeah, hold on. Let me open up some stuff. They give the best leverage, and I mean that helps you, get more on your trades. But the only thing about it is it cut both ways. So a lot of folks they'll get in and they'll go mess with that one because it has the most potential to make money. But on the same way, it can tax that ass.
Okay.
It is definitely taxing. Let's see. Let me find this little file. Uh, let's see. Was this one? Let's see. There it is. Yeah, get this. We got a monetary cheat sheet that's really helpful, especially at the beginning. I mean, now I barely use it, but because I kind of know what lot sizes I like to use, whatever. But it comes out real helpful in the beginning, especially when you're just trying to figure out like, well, how do I know if I'm risking too much? Like I don't really
Yeah.
know just yet. So it really helps out with that. Yeah, MetaTrader 4. They also have a computer app, not a computer app, a computer little program that works too. That's what I have open right here. That's this one I have up right here. This is the FX Glory. Matter of fact, I'm gonna forward that over to you too. Even though you can like download it from the website, I'll forward it over to you because once you're drawing it up on a computer, it's bigger. You can see more stuff that's going on and whatnot.
Yeah.
I'll make sure. I think I actually have that. I think I sent that to a buddy not too long ago, so you just forward it over. Uh, yeah, there it is. Forward that. There you go. Once you create a demo on there, like if you create a demo from there, they give you this screen with like a fake, like a demo username and a demo password. Make sure you either take a screenshot of that or snapshot it because once you close out of it, them credentials are gone.
Okay.
Them credentials are gone, and I think having those, even though it's only a demo, but having those demo credentials at the beginning, it kind of allows you to kind of get used to like tracking stuff and whatnot. All right, so we got this joker here. Let's go to another one. I am going to kind of explain what all this stuff on the layout is because it's kind of the same on the phone, but here you'll be able to kind of see a lot more. So let me see. Let's get yeah, I got everything off the screen except for the bare minimum. Now it normally kind of looks like this, or whatever, but just so I can get it like broken down to the most barest of essentials, I took everything off the chart while I tried to. Let me make sure. Where's my indicators? Yeah, buddy. All right.
Okay.
So this whole thing right here is the FX Glory trading interface right here. So I guess I'll start up here with this left right here. This is the little market watch. These right here are the different currency pairs you can trade. And currency pairs, they really like battle each other. So like this one right here with the USD is USD versus Canadian dollar. So if one's going up, the other one's going down. So if the U.S. has some good news and Canada has some bad news, you can bet your ass this pair is going to be going up and vice versa. Sometimes they both have bad news. Then it's kind of like a kind of tricky, because you're trying to figure out which one is stronger and stuff like that. But the easiest way to read these is for like whatever's in the first row. That's one. So this would be for this is U.S. CAD. For $1, you get 1.333. What's it? 323? 1.323 Canadian dollar, and that's how all of them are read. So whatever the first one is, that's one. That's the base currency, and the second one is the quote currency. So
Okay.
and if the base currency, like that's the one. If the economy is going up for that pair, that means that currency is probably gaining some strength and vice versa. If that currency is got some bad news, the front one in the front, that means it's kind of going down or whatever. So they have all of the little symbols. If you're on the little market thing right here, you can actually right click and then hit symbols, and it'll give you all the different pairs you can trade. The number of pairs is growing like all the time, like cryptos, and you can trade. I mean, certain stocks you can kind of trade on here as well. Even though you kind of trade stocks with like a different broker. I like to use TD Ameritrade. They're pretty cool. But Robinhood is an excellent one for people just beginning. If you just want to I'm just getting into some stocks because I like the company and I ain't gonna put a whole lot of money and I'm not gonna be looking to pull it out for a while. Robinhood is cool because it's free. They make their money off of advertisements, and I think when you lose money, of course, but other than that, they don't really have no upfront trading fees and stuff like that, which is pretty dope, especially at the beginning. So you'll have all your little symbols and stuff like that up here. Right here is the time frames. These are really important because let me click on. You have the month, the week, the day, and all this other stuff, right? So this is the week chart. Let me zoom in a little bit. So this right here, every candle on the week chart, every candle is a week. So this candle is a week. This candle is a week. Like no matter how big they are, like this weird candle right here. This was 1 week. This was 1 week. So they are the same amounts of time per candle. And the thing that makes them different is the amount of activity that happened during that little time. Yeah, so that's real nice to see. And you can really kind of tell, like, over here, this is the minute one. So that means every candle was a minute, and I really like to go to the minute because the minute really kind of helps you learn to learn about a candle, because there's a couple parts about a candle that are really important. Well, let's see. Well, first thing, the green ones, these are the bull candles. These are the buyers. Those are the people that believe that it's going up, and the red is when it's going down. It's essentially only doing three things: going up, down, or sideways. Going down right here, going up right here. We like to catch it around the times that it pivots, so you can go ahead and get the maximum pips and stuff like that. It gets a little tricky at first because you can't predict it. Like no matter how much stuff you do, whatever, everybody gets too comfortable in what they're doing. They're like, okay, I'm going to predict it's about to do this. Oh, I'm about to do that. So you can kind of drive yourself in circles. But there are different little ways that you can kind of protect yourself from that, and you can kind of just make sure that I guess not only protected but just ready when the move happens. Like you see little arrows right here. These little arrows are alerts, and these alerts kind of like I don't sit on my computer all day because I have these alerts, and they can come to your phone, your email. You can customize them, and when I say customize them, now your brother-in-law just a tad bit extra sometimes, just a tad bit. So I made my own. I made my own. So when I'm in the room or laying down to something that I'll hear it. So mine goes stuff like this here.
The can long, the big you got it going on. The can long.
So of course, Tanya hates all this. Just throwing it out there, and so I just like to, be on the. Let me see, like if shit's going sideways.
Shit's going sideways. Shit's going sideways.
And you can program your own. You can have them come to your phone. You can have them sing out. You can have them come out like every 10 seconds. I usually, like, if I'm going to sleep, if I'm going to sleep, I'd rather not have a trade open unless I'm going to be into like a very long trade. Then I'll make sure just to have some alerts and stuff like that. But there are different little ways, to protect yourself when it's moving. But I'm going to go back to the minute candle because the minute candle, it really shows the creation of a candle because every candle is only a minute. So you get to see a candle be born and die. So here's a new candle that just started right here. So it started right here, and I'm going to let it play out a little bit. It's going up, so it's green. Let's see. And you see how when it hits this top and it comes back down, now it has this little tail on it. See right now, no tail. And let me see. Come on. And it got that little tail. This right here, this little tail right here is called the wick. That means that just basically means that it went that high, but it couldn't close that high. And when this candle finishes, I'll kind of explain, like, where it opened, where it closed, the highest it went, the lowest it went. Because these candles, they're really cool because they give you like a really quick screenshot of, how high it went, how low it went, where it opened and where it closed. And that's what they kind of give you real fast. And the biggest candles, while we let that one play out, like this candle right here, 1, 2, 3, 4, like these little wicks right here, like they basically mean that the price went that high, but they couldn't sustain. And okay, so that candle just finished. All right, man, it was a doji. So, all right, this is a really thin one. So I was looking for another one, but I'll go from this one right here. This little green, I guess I don't really want to do a doji. Let me see. I was hoping it had some body on it so I can kind of explain it. This right here is referred to as a doji, which means that it didn't have no body. You know, it had a whole bunch of legs but no body. And that's really a sign that normally that's either a sign that something's getting ready to turn around or that's just a sign of uncertainty. Now, mind you, we're on the minute chart, so the minute chart just moved too damn fast. I knew a dude that traded on the minute chart, but I'm not gonna lie to you, I'm not about that life. I'm a 4-hour day guy. You know, it's a little safer, it's a little smoother. You know, let's see. I was hoping. There we go. So this one just finished. There we go. That's a normal regular candle. So this green candle is going up. This the buyers. This is where this candle started at. This is where it opened. It went as high as up here, and it went as low as all the way down here. But it closed. It closed right here.
Yeah.
And this one right here, it opened right here because the red ones they kind of like the opposite. Where the green ones open at the bottom and close at the top. The red ones open at the top and close at the bottom.
Okay.
You know, with the wick being as low as it went, and then as high as it goes. That's really important because that's a way I get in on a lot of trades. Now we'll go back up to the day chart, and so the bigger the time frame, the more information is reflected. So that's why I like to go to the 4-hour and day one chart because you get to see like look at that. Okay, so this is the day chart right here. And a lot of the times when we're waiting for a chart to change momentum from going up to down, one of the clear ways that it kind of tells on itself is when it starts wicking out and stuff, like these little wicks right here. Like whenever it started, like this was a clear uptrend. It was going up. It was 1, 2, 3, 4 days of going up. Then all of a sudden it started to slow down a little bit. Maybe this one didn't tell you it was time to get in, but then it did this big ass wick right here. And like if I was watching this live, I'd be like, ooh, let me see. Like right now, I'm actually waiting for this to kind of come down just a little bit more and kind of go up a little bit. Let's see, what's the one? I have a buddy getting ready to pull up on me for the 8 o'clock. He wanted to be here, so he just hit me up now, see what was going on. But these wicks right here, they really like tell the tale. And here's the crazy part. There are, when I say countless, let me show you. Terminal? I think it's terminal. Yeah, terminal market. Because see, what I have up a naked chart. Boys be doing all type of crazy shit to their chart. If you go over here to the little market area, all these little things on the market are different little indicators people have either made, and they are selling them 600, 400, 300. They selling some of them, and they have a lot of them that are free. Only ones that I use are free. The reality of it is all these hoes work and all of them don't work. It's based on I think that's the loudest part about trading. After you learn all the rules and shit, it's really based off of your personality and tolerance. I think that's really the most gangster part. Like, yeah, we got to learn all these little rules and shit to go with it, but after that, it's set up to your personality. If you're not a risk taker, you don't have to be a risk taker. You can use small lots. And now lots, in fact, let me open up this one-click trading. These little 0.15s and 0.01s and 1.00s, those are referred to as lots. They ain't nothing but your bet. The higher the lot size, the more your bet. The standard lot is $1, but like for me, I normally trade somewhere in the 0.05 to 0.50 range with $1 when I'm feeling either really confident or the charts at a major area that is turning around on. So when they say lots and stuff like that, just think of that as your bet. Just think of that as your bet. And honestly, with buy and sell, I really don't know why they call this shit buy and sell, because unlike stocks, you're not buying or selling. When you think buy, just think that I think the price is going to go up. When I think sell, it's going to go down. Okay. Yeah, that's all you got to think about, because what used to get me in Forex is basically like, so I got to buy before I sell it? Like, how I sell it, I ain't got it. Like, do they know I ain't got it when I sell it? Like, how does that work out? And it was like, nah, bro, that's just the terminology you use. Sell aka short. Whenever they say we're going to short a pair, that means we're going to sell it. And if we're going to buy or go long on a pair, that means it's going up. So that, you know, we want to buy it. So don't let like little terms like that, the buying and selling, throw you off of lots. Because I mean, when you first come in, boys talking margins, lots, shorting and going long and shorting and shorting for a long time and going long for a short time. You're like, huh? You know, it can get a little bit confusing because there's so much out there. But like, just think, you know, buy long, I'm thinking it's going up. Short, sell, I'm thinking it's going down. And those are different little terms. When it comes to the lot, that ain't nothing more than your bet. The bigger the lot size, the more on the bet. Now, let me see, because I was talking about this earlier, this monetary cheat sheet, and it is, I mean, absolutely beautiful. Now, mind you, at the beginning, turn page. Let's see. So I guess a couple things at the beginning. Of course, we want to get you set up with like your demo, kind of get you playing around a little bit. Like what I recommend when everybody gets started is once you get your demo set up, check out the Euro, and the Euro is the Euro/USD. It's nicknamed the Euro. This is the first pair we tell people to start off on. It's a safe pair. Well, I mean, as safe as a Forex pair can be. It's a slow mover, but when it does move, it has some gumption on it. But it's a relatively easy pair compared to this pair right here. It's the pound yen, nicknamed as the dragon. This a wild motherfucker. You know, it really moves something crazy. And I mean, I've seen people make and break fortunes on this one. You know, I actually used to trade this one a lot, but now I only mess with the CAD. I've only focused in on the USD/CAD, nicknamed the CAD. Well, I guess I can tell that too. Any pair that has USD in it, that's called a major. You know, that's like the big dog because everybody kind of uses the dollar as a base of measurement. So it's USD/CAD, we just call it the CAD. You know, same with the Euro/USD, you just call it the Euro. Only time you start like this right here, the Great Britain pound/USD, just called the pound. Only time they start getting names is when they cross, like this one right here, which is where did it go? The pound/yen. Now it's called the dragon. So you have major pairs that all got the USD in it, and then you have these cross pairs. USD pairs are normally a little cheaper to trade. They're not as volatile, so it doesn't really, the price doesn't go up or go down that much per move versus a play like the dragon. And that's why the dragon actually moves so heavy, because both of these pairs is, you know, none of them are American or whatever, so their conversion rate is very high, so it moves a little bit more faster. Yeah, so you definitely want to get you like set up on the demo, and you know, just get a buy and a sell in. Once you go over to FX Glory and make an account, they'll allow you from the website to create you a demo account. And you can create a live account, and you don't have to worry about funding your live account right now because there's a couple things you want to do beforehand. Now, I say that with a grain of salt because in trading, no one can tell you what the fuck to do. It's all right. I recommend you play around in the demo just a little bit. And then when you go live, treat the live, like, don't get me wrong, treat it as live, but like only put $50 in there and just kind of, you know, get used to it, because the emotional part of it, oh, that's the one. That's the one. Like, man, like when you like in the demo and you getting your screens up, a pip like from right here. Oh, this little tool right here I'm using. These right here, because we already talked about the time frames in the market watch. These right here are your little tools, your chart tools. They come in very handy. This one right here ain't nothing but your little, you know, stroller guy. And this crosshair, I mean, it comes really important because not only does it pinpoint, you see, pinpoint what what price movement it is. Like this price point right here is 149.37. You know, it really helps you also see how many pips it is. So, like, if you drag this, you know, all the way down here, let's just say I'm trying to see how many pips it is. You see where it says 6,833?
Yeah.
That's only 683.3 pips. They give you that fourth decimal kind of as a courtesy to let you know which way the other one's going, but that's 683 pips. That's how many pips that is. And a pip is every time that, you know, it ticks. If you go over to the minute chart, every time it does this little move up, down, that's one pip, you know. So you can see the little chart right here. Matter of fact, that 6 that's moving, you can always ignore the last decimal. The last decimal don't really mean nothing. That's just a courtesy. So this is 1.4614. That's where it's at. And if it goes up to 1.5, that's up 1 pip. If it goes down to 1.3, that's down 1 pip. That comes very helpful when learning how to trade, because at the beginning we all just thinking money, and thinking money on trading really have you messed up. You really have to trade the pips and not the money. Because, we really don't, because I've seen a guy with negative 600 on the trade, but, he didn't close his trade, and as a result, he was up 7,000, And
Wow.
So, it can move.
It all depends on the up down.
It all depends on the up down. And I'm gonna show you a few things like on that monetary cheat sheet where you can really see like the difference like a lot size can make. That's why I tell people to start with like small lot sizes, because you just really want the pip confidence. You get the pip confidence, the money will come. It really as simple as that. You get comfortable with 10 pips on any trade. My boy Ro in the group, he's one of the best traders I know, and he really only get 20, 30 pips per trade, but the way he trades it, that could be about a couple thousand. Matter of fact, oh man, let me show you this one he had a couple weeks ago. This and then mind you, this was rare by his standards too, because he'd do a good trade, but this one just started acting a fool. He just really got in at a good ass time. Let me see, that ain't it. Where is it at? That's him, by the way. He from the Mo. Let's see, where is it at? No, that's not the one. What did the boy trade at? I want to see it because it was a damn good trade. Oh yeah, it's coming up. Yeah. Okay. So here's his trade. Here's a trade from him about 2 weeks ago. He has $100 in his account and he's up $4,000. $4,300. Now his trading, he's a comfortable trader. He's been doing it for a longer time, so he can kind of do this a little bit. But like the thing about his trading strategy, I like whatever, is forced risk management. See, me and him, we have 2 different strategies for risk management. He has more disposable income than I do, so I can't be playing around with like he'll put 100 in, and if it boosties, and boosties when your account is wiped to 0, wipe me down. We call in the group we call that getting hit with the boosty. So if boys in there sharing boosty memes, it's not a good day. Boosty done came for us, and so what he'll do is he forces himself, because you can only lose what's in the account. You can't lose anything more than what's in your Forex account. So the way he does it is he puts in 100, makes his trade. If it's wrong, he'll lose $100, load it up again. But this particular pair, I think he paid maybe 300. He boosted out twice and then put the last 100 in and started hitting. So me personally, I don't work like that. I kind of like to build an account up. That way, if I take a big ass loss, it won't wipe my account. It'll be down because I'm playing with light money and shit like that. So I can't. Yeah. You can't get too loose, But you can have some really good ones depending on the pip movement or whatever. So let's go back over here. I'm on a 4-hour chart real quick, which is the chart I operate on all the time. And then also you'll kind of really start kind of getting a feel for it, because it's going up, down, sideways. And that's why we only say focus on one pair, because when you focus on one pair, you kind of get like in rhythm with your pair. It's going down. And when you do get faked out, you don't trip. You just use some good risk management to keep you at bay. So like this chart, this is a perfect example right here. So it was normally when you're looking at a chart, you want to kind of back it up so you can kind of see what's going on. And yeah, this is nice. This is, you don't like to back up just to see what's going on. And so right here, it was going up. It looks like it's kind of going down a little bit. A lot of the times it's probably going back down here, and unless it finds a little resting point or whatever. So let's see. This is all the way down here would be 300 pips. That's perfect. A good, nice round number. 300 pips. Now let's go over to the monetary cheat sheet so I can show you how you can really. What pair is that? The pound? There's the pound. Where's the pound? Well, I guess I use this one for the pound for right now. I gotta update this joker. I think this is the old one. So this little monetary sheet, whatever, which looks a little confusing at first until I walk you through it. It really kind of gives you the heads up of what you're looking for. So let's say you have about $50 in your account and you want to make a trade, but you're not really sure exactly, how much you can risk and stuff like that. a lot of times we'll kind of figure out on this chart, like how many pips do we think to gain? Like if I was getting on this trade right here, I'd be like, okay, it's 300 pips on the line. I know for a fact, me personally, I said, let me get about 200 out of them 3 and I'll be good, you know? So let's say we doing that monetary cheat sheet. So these right here are the amount, the pips that it rises, that it falls, and up here is the different lot sizes. And this chart really helps explain why learning how to get you a couple pips is way more important than learning how to read your money. And like right here, I have it on, I don't actually like to leave it on money. Honestly, like I like to drag that board down so I don't even see the bread, so I can only see the pips. And right here, this would be, this is not negative 67, this is negative 6.7 pips. You know, so I like to leave it like that so I can see exactly how many pips I got, because the pips are the only thing that really matter. They really are. Like an example, you only got $50 in your account, and like on this trade right here, if you went got those 200 pips that I said I was going to get, that's $20. $20 off of 200 pips off of 0.01. That's the smallest lot size you can make. You know, that's the bare minimum, whatever. If you something else too, I guess I should have said that. Anytime you look at how many pips that it can go this way, I always think about like, all right, well, that's cool, but what if I was wrong? Like, how long would I be willing to be in this trade to figure out? I mean, you know, how long would I be in to figure out when to get out or so? And so, like, a lot of times I'll drag up. Like for this one right here, last time I probably want to, I would want something that can, if I was getting in right here, I would want a lot size that can go up here and not break my account, you know, just in case. Yeah, it went down, then it went up, it went down. It's kind of playing around. What if it went up again before it continued to go down? So I'd want a lot size that can accumulate, that can accommodate that right there. So let me just put a few things real quick. I put this line right here just because this was kind of like a little resting point for it right here. I think that's a damn good restaurant. It's a resting point here, kind of rest there, kind of kick it there for a little bit. So I put one right there. A lot of times we like to put the house, the roof on it right here. This is the top line, you know. The top and the bottoms are called support and resistance. Support is just like the floor supports you. So the support is the floor. Resistance is the ceiling or whatever. So a lot of times we like to just come over here and just put a top and a bottom on it, wherever the most bottom part, you know, the top part. And you can kind of see, okay, that's the kind of range it's been in a little bit. And I'm gonna do another chart like this chart over here. I got all the way marked up. I'm gonna go through that one after we kind of look at a few things over here. So let's see. I just put a top on that one because it went up here. Then I put a bottom up here, and you see how like this little top right here, like it came close right here. It came close right there. You kind of see this little invisible line that kind of got that chilling at. Where is that? Rectangle. There we go. Yeah. Okay. So they got this little top right here, and this little orange line is where it's been respecting it. Like really, you got to think of it as like it just put some respect on my name. Every time it went up here, you know, it wanted no clicks. Every time it got to this area, it came back down. Every time it came over here, it came back down. So this right here is an area of interest. You know, it's a resting point. Right here would be this is a good resistance area. Even though I got my line right here, this little area right here is a great resistance area right there. And the resistance is nothing but the roof that is set at. You'll hear a lot of stuff like support and resistance and supply and demand. It's basically wherever the chart decided to kick it at, you know, because most of the time it's moving. So whenever it decided to kick it at, it's a good place where it's going to either go back to or where it's going to depart from. You know, so like right here, you know, it kicked it up here, then it started coming down. Then down here, it kicked it, you know. So I'm like, okay, bet I'm in between these little areas, and I'm gonna put me a play in. I'm trying to get down here. If I put in a sell and it goes this way, I'm gonna make some money. If I put in a sell and if I put in a buy and it goes down, I'm gonna lose money because buy means I think it's going up. You know, and so you know, so I better be in on the sell right here. But
okay.
Yeah, because you see, you got the option to sell and buy. Like right here, if we bought in right now, that means we think the price is going to go up, and if it goes down, we'll lose money. You know,
Gotcha.
Vice versa. You know, so you got to, I guess, you know, be on the lookout for stuff like that. But for this one, it is how many pips did I have? Okay, so that looks to be really. So that is 92 pips that way, and that is about 348 pips that way. So if I get in on a play right here, I need to have a lot size that won't boost my account. And so for this hypothetical account, let's say we have 50 in there. If I lose 100 pips on a .01, that's only losing $10 on a .01. So I can lose that and still have $40 in my account to come back with them and hit them again. You know, and if I hit my look through 200-300 or whatever, I'm looking at maybe $30 or whatever. Now, let's say you start getting in the habit of, you know, I like to do really 30 and 90. I like to risk 30 pips and get 90 pips. And so, you know, 30 pips on the .01, that's only $3. But if you get in the habit of getting 30 pips without changing anything of your trading strategy, except for the amount of money that you can play with your equity, you put in like this same lot size with a .01 is $3, but with a dollar lot, that's $300. Same amount of work, same amount of pips. The only difference is your bet. And your bet changes by the amount of money you have in your account that you can, like, you know, trade up. So that's why I tell, like, you know, don't really worry about like the dollar amount. I had a buddy, he got in the $50 trades, you know, $50 account, and he would make a little trade, and he'd be sitting up there with like $1, $2 or $3 in his account, and he'd be like, "Oh man, that ain't shit." And I'm sitting there like, you need to respect the pips because you just got 30 pips. That $3 may not feel like shit to you, but if you continuously get in that flow of getting my 30 pips, my 40 pips or whatever, you can scale it up. You know, you can really scale it up. Like for me, I really like a good 0.10, 0.30, 0.10 to 0.35 lot size. I'm targeting anywhere between 30 and 100 pips. And, you know, and normally you just let that continuously to rack up, you know, and you learn all these rules to really create you like a trading strategy, and that trading strategy is going to govern your emotions while trading. In the demo, you don't really have any emotions. You're just trying to learn. You're playing around. But when you get in that real account, oh, it's so many different emotions going on. You know, you know, and focusing on the money in the live account is what makes a lot of people lose. Like, oh my God, I'm negative. I've been negative for so long. You know, like it's only going to go worse or whatever. You know, that live account, it really draws your emotions out. And I think that's really the real difference between demo and real is just how you manage your emotions. And, you know, because just seeing money, it got to the point where, matter of fact, a very good jewel, and I'll make sure to type all these up, but hold your winners and cut your losses. You know, whatever your personality is, it will be reflected in trading, and you will see the good and the bad side of it. Me, I'm very optimistic. Oh, you know what? That should have turned around. I'm sure it'll work out. You know, the Lord said he ain't gonna put me through nothing. You know, it's gonna turn around. That's, man, in trading, that's such a damn fool mentality to have. Cut the loss. You know, cut the loss, because more likely it's not gonna turn around. It's gonna continue going that way, and it's gonna ruin your account. So cut the loss, but hold the loss. You know, because I ain't gonna lie. I used to have I'm still working to get over it. But I will hold a trade for a long I wouldn't hold it for that long. I'll be up $60, $70. I'm like, oh, you know what? I'm good. I'm cool. And then I'll come back and like, damn, I should have let it breathe. Ooh, I should have let it breathe a little bit. And to see, that's called FOMO, or fear of missing out. It's a constant trading psychological thing where, you know, man, I could have had more. Man, I should have had more. Like really be grateful for any profit, be grateful for it. And then just get it on the next trade. You know, don't really chase trades or whatever, because that's something else too that I had to learn really the hard way, which is like chasing trades, thinking that the market is on your time. You know, we'll put on the 4-hour chart and say, well, I'm going to be in this trade for 2 or 3 days. You really don't know. And having those preconceived notions will lead you to a lot of losses because you think the market's on your time. You think the market's predictable, or the worst one, you're going to do all this stuff, get comfortable, start making a little money, and then you make the biggest mistake is thinking that, oh, you know what? I know Forex. I got this shit in the bag. I'm good. I got it's a fellow named Noah. He used to be in the group. He's doing MCA or something like that now. He used to be in a pretty good trader. He still trades, whatever. He just doesn't trade in the group anymore. He hit 20,000. He hit 20,000 on the trade once. And he really taught me coming in about acting like you don't know Forex or whatever, because he really hit 20,000 and he started getting the idea that I knew Forex. When you hit 20,000, he thinking the next stop 200,000. You know, so he started trading a little bit bigger, stopped taking the same precautions that he once took. Yeah, he lost like 14,000. He lost like 14,000 out of that 20. So he lost majority of that. And he took like a couple months off from trading, which is expected, you know. But you know, he act like he knew Forex, and whenever you act like you know Forex, it's gonna definitely bite you in the ass, you know. So you definitely don't want to. You definitely don't want to have that. But you can tell from over here just by getting in the habit of getting you the certain number of pips, you know, that'll really increase the bread. And more than anything, like I'll say, you know, eventually at the first you're looking for like 10, 20 pips and just stay at the 0.01. And when you go live, when you $50 in the account eventually, just 0.01s, you know, like, man, it's so funny because I had an $8 trade one time and I showed Tanya. It's like, man, look at that. And she's like, all right, you know, okay. It's a whole $8. But I'm like, no, baby, that's 42 pips, man. I'm trying to tell you, baby. Had I put in a 0.5, I'm trying to tell you, it'd have been going down, you know. And you find yourself getting excited about $3 or $4 trades, and not because it's the amount of money there, because you're like, man, that's my third time in a row getting 30 pips. I know for a fact that if I can keep up getting me 10, 30 pips, all I got to do is scale it up. On them plays that I just showed that Ro had, it was 20, 30, 40 pips per play. He really wasn't crashing a lot of pips, but he had a high lot size. And see, me, I like to kind of work with the balance in the middle of, you know, a moderate lot size, you know, with a couple pips on the movement or so. That old website, Baby Pips, you don't really need the whole website, you know. I mean, because let me go to Baby Pips. Baby Pips, and there's this book called Astro FX. The Astro FX book is boring as shit, but it's really good. But it is a boring book. It took me like 7 times to read. What really made me read them the last time is that Methodist started tripping. They started trying to handle me a little bit, and I was like, you know, I don't even come up here that raw for you to handle me. You know, you should leave me alone. I come in and get out the way. You know, but they, you know, so that's what really made me say I got to read this. But like you see, it's 301 lessons. They're by like schools and stuff like that. I've only done 61. And I mean, I've you know, I've been reading them and stuff for a while. You don't need all of them, but the first 2 or 3 really just kind of helps, you know, get your ideas on what certain things are and, you know, kind of what they mean and little stuff like that. After you kind of, you know, read a little Baby Pips, a lot of people come in the demo and they start trying different little things and little strategies or whatever. What do you want to do in the demo? Of course, after you around a little bit, because the first stage you really just want to play around and how I do this and how I do that and how I set the screen up like this or whatever. When you open up the screen like this, it ain't gonna look like this. It's gonna look something like this right here. Oh no, damn. It's gonna look something like that. And you know, maybe you like that screen. Me personally, I don't. You know, so I end up coming over here and making my own little template or whatever. You know, what's that, KB2? You know, something like that, whatever, which, you know, I'll be able to see the screenshot of the little property screen that's like this, whatever, so you can kind of, matter of fact, I'll take a screenshot right now. So you can already have that. There we go. Yeah, a little something or whatever. So you got that there. That old Baby Pips go come in handy. A couple things you really have to, at the beginning, you kind of want to know, you know, of course, you know, you want to know what a pip is, and you want to learn how to, you know, how to count pips and stuff like that. Because a lot of times, you know, you get on the trade like this trade right here, I'm down 11.5 pips, you know, so you want to know like, okay, you know, when the play is over, how do I see how many pips that was? It's just really subtraction. Only thing you do is subtract, you know, the price from wherever you exit out the trade, and you see how many pips you up or down or whatever. You kind of want to, you know, look at your currency pairs. You know, all currency pairs, they have news stories that break along with them that show, you know, how volatile they can be and stuff like that. That's another website, but we'll get into like the news trading later. Right now, you just kind of want to, you know, understand what you see on the chart, because at first it's just what the hell, you know, it's lines going up, it's lines going down. It's definitely confusing at the first. So at the beginning, before you're starting to figure out trading plans and strategies and news and stuff like that, you know, really just get the understanding of, you know, okay, this type of candle, you know, going up, you know, going down, what a pip is. Like we were talking about reading candles earlier, okay, well, that candle started there. Something else too. Where is it at? Check this out. Forex is 24. It's 24/5, I guess, 24 hours for 5 days a week, whatever. There's always a trading session going on. So knowing your trading session is important because a pair that's in this trading session is going to move more heavily than other pairs. So 2 a.m. to 11 a.m. Anything that got something from across the seas, a euro or a Swiss franc or something like that is going to have way more activity going on. And the same with New York, 7 a.m. to 4 p.m. Anything that has U.S. in it is going to have a lot more activity. So, you can kind of plan, what you trade about, what time you have. If you only have the nighttime available, you might want to trade London pairs, 2 a.m. whatever. If you don't want to be up that late, whatever, maybe you want to trade like a Tokyo pair or whatever. Like the yen is a good Tokyo pair. But the yen actually moves in the Tokyo and New York session because it has yen and U.S. in there. So, you definitely want to be able to know what session you're trading in and stuff like that. There's little websites that'll tell you the exact trading session we are in, but you can always go on there. When it comes to the monetary website, we have a lot of stuff on there right now. Like you'll see right here on the little members page, it tells you that we're currently in the Tokyo and Sydney session right here. It has the little monetary cheat sheet. I see I got a tiny picture right there. The monetary cheat sheet right there. Got a little chart up there. On this homepage, I see we have different news stories and little stuff like that. So I think, because I see it's 7:57, so the other one's getting ready to start in about 3 minutes. So I tell you what, we'll be wrapping this one up and switching over there. We can either continue either after, but if after too late, we can pick this right up tomorrow because I just still have a couple things I want to go over with. Hold on, let me get the note. What up, pimp? Nothing much. Oh. But I'll say, if nothing else, what I recommend right now is make sure you have your MetaTrader 4 on your phone. Go to FX Glory, create your account, create you a demo account, and log that demo account in on your phone. Maybe go over to the Euro on the demo account and place a buy and a sell in. And just both of them in or whatever, and then when we get to pick it up, either after tonight's meeting if you're up for it, and if not tomorrow, we'll pick it up. And one of them's going to be hella positive, one of them's going to be negative, and we get the task of finding out why. And then finding out why is going to show you so hell no, I wouldn't have did that one. So it's one of my favorite first exercises to start. And the matter of fact, the longer the better. But a good day or so if she could. So I say that link I sent you for FX Glory, go ahead and go to the website, create you one. And then after they give you your little demo stuff in your email, you can actually use the little browser thing to kind of log in and stuff. And once you get that buy and the sell in, we'll be able to pick up some more. And some of those baby pips, that first two, man, them first two are golden. That book is long and boring as shit, but the first 2 chapters of baby pips is cool. He ain't tripping too much. It's giving you some real good stuff.
Okay.
Tell you what, I'm going to go ahead and get out so I can get that one prepped up real fast. And if you up for it, let me know afterwards. We can get right back on. And if not, we can keep on tomorrow. I'm just going to go on there and just kind of explain some of the stuff that we'll be doing. And after the special is over, we wait until after the special is over. But after the special is over, we're actually going to be all our stuff that we've been doing in real estate with our other company. We're actually going to be getting away from that company and bringing it all back to monetary. So and showing people either how to do it with us or do it themselves, whatever. Me personally, I'm going to be showing them how to do it themselves because I'm good, But we're going to be showing different ways to just have a whole bunch of things work for you. So I'm going to go ahead and get off, and I'm going to send this video recording to you. If you have any questions for either ask them at the meeting at 8 or whatever, just ask me right after. I hate to rush it off or whatever, but I ain't going to lie. I didn't even catch what time it was. I get to talking and start talking excited and stuff, it just goes away. I was on for 4 hours the other night with somebody. We did a one-on-one. It was on for 4 hours straight, going. And hey, she was all in, so I was all talking. So yes. So this is the first of many. Welcome to the group, and get that demo started or whatever, so we can kind of get you in the habit of it. Because once you get in the flow of it, then it gets fun because then it's about creating your style, how it flows to you, and it's a lot of different ways that you can set it up based off your personality too.
Okay. All right.
So I will see you in the other one. I'm going to go get it set up and let the guys in the group know.
All righty. Thank you.
No problem. Anytime. And we got another one we need to get to so we can wrap it up because I didn't get to get into all of it because I was excited.
Okay.
Okay, though.
Okay.
Let me let them know. Okay, though.